Hi, this is Rakesh and welcome to our one more accounting video. And in this video, we are going to discuss a topic. So our topic is what? Capital employed, right? Because for the valuation of goodwill, sometime we need to calculate a super profit, and to find a super profit, we need capital employed, right? So in our today's video, we are going to discuss the meaning of capital employed and how to calculate that capital employed, right? So let's start the video. So see here, the meaning of capital employed is what? Capital employed refers to the fund used by the partnership firm to run its operations, right? So this is the definition. It means fund used by the firm. So that fund is known as what? Capital employed. So let's take an example. Suppose there are two partners, partner A and partner B, right? Partner A invested, let's say, 50,000. Clear? In the firm. Partner A invested rupees 50,000 in the firm and partner B invested rupees 30,000 in the firm. So they total invested how much money? Total they have invested rupees 80,000. So this is the total investment done by them, right? Now imagine out of this 80,000, 10,000 they have invested in Reliance Industry. Reliance Industry. They have invested. They brought the shares of Reliance Industry and they invested how much? Rupees 10,000. Right? So both they have invested 80,000, but out of that rupees 10,000 they have invested outside the firm. Okay. So how much money left in the firm? Only how much? 70,000. So that 70,000 is actually what? Capital employed, because though they have invested 80,000, but firm is only using how much? 70,000. Reason why? Because out of 80,000, 10,000 they have invested outside. In which company? In Reliance Industry or any other company maybe, right? And so this they have invested for a long-term purpose. So that's why it is called as what? Non-trade investment. Non-trade investments. Clear? So this is the meaning of capital employed. Capital employed doesn't mean that how much partners have invested. Capital employed means how much the firm is using the fund out of that investment, right? Now there are two formulas actually to find out the capital employed. So both formula we will use and the final answer will be same. So first I am going to use the first formula to find out the capital employed. So according to the first formula, first we have to take total assets. And when I say total assets means excluding non-trade investment. And just now we have seen why we need to remove the non-trade investment. Because that money is not actually the money which is firm is using. Firm is not using that money. That money already, we have withdrawn that money and we have invested outside. So that's why that non-trade investment we have to exclude. And apart from that, we have to exclude existing goodwill also and fictitious assets also from the total assets. Okay, so I have taken one balance sheet both on the asset side and the liability side. This is asset side and this is our liability side, right? So using this balance sheet, now we will see how to calculate capital employed. So according to the first formula, first I will take total asset. So my total asset is how much? 67,500. This is my total asset, right? And from this now I have to exclude what? Non-trade investment. It is already part of this total, right? 6,000. If we see the balance sheet, investment, there are two type of investment, trade and non-trade. So we have to remove only non-trade investment. Okay, we have to exclude. It is included in this 67,500. So now we have to exclude. So minus 6,000 rupees. Then existing goodwill. Yes, in the balance sheet goodwill is also there. So that also we have to remove. Right? And then we have to remove fictitious assets. So in our balance sheet, there is one fictitious asset, advertisement suspense. And how much money? 1500. So advertisement suspense is kind of deferred revenue expenditure, heavy expenditure, and still how much is left with us? 1500. So that also we need to remove 1500. Right? So total asset excluding non-trade investment, goodwill and fictitious assets. If these are there in total of the assets, so that from that total we have to exclude all this. And then we need to subtract what? Total liabilities. Okay, so here we have these two are current liabilities and this one is non-current liability. So all three we have to subtract. I mean to say current liability as well as non-current liability, bank loan. So both type of liability I have to exclude. I have to subtract. So creditors is there 7500, that I have to subtract. Then bank overdraft 10,000 I have to subtract, and then bank loan 20,000 I have to subtract. So total asset excluding non-trade investment, goodwill and fictitious asset. Okay, and then from remaining assets I have to subtract total liabilities. These two are current liabilities and 20,000 is a bank loan, that is non-current liability. So now let's see what figure we are going to get. So that is the amount of capital employed. So this is our capital employed, right? So this is the first formula. So we got this capital employed, okay, with the help of this first formula. Now same figure we are going to get again, but this time we will be using the second formula, right? So let's see the second formula. Second formula says capital plus reserve. So capital, here we have A's capital is 5,000, B's capital is 10,000. Okay, amount invested by A and amount invested by B. Then we have to take reserves. So reserves we have here only one general reserve we have 15,000. So that I have to take. So capital plus reserve. So all capital plus reserve total is how much? 30,000. Right? Now what we have to do? Now from total of capitals and reserves, I have to subtract these three elements. One is fictitious asset, that is 1500 we have. So that I have to subtract. Then non-trade investment, right? 6,000 I have to subtract. Then existing goodwill. So that 2,000 I have to subtract. So let's see how much capital employed we are going to get, right? So let me find out. Okay, this is total of capital and reserves minus fictitious assets minus non-trade investment and minus existing goodwill. So we got same amount, 20,500. So any of these two formulas you can use to find out the amount of capital employed, right? So which formula we have to use? Actually it depends on the information given in the question. So we need to see what kind of information given in the question, and based on that we will decide which formula to use, formula 1 or formula 2. So you use any one of these two formulas, answer will be same. So our capital employed is how much? 20,500, right? I hope you guys understood the meaning of capital employed. Again I am repeating, capital employed doesn't mean amount invested by the partners in the firm. It means how much money the firm is using. So that is known as capital employed, right? And very important thing is what? Non-trade investment we have to subtract. Reason why? Because that money is not invested in the firm. Firm is not using that money. We have invested in the firm initially, but out of that investment rupees 6,000 we have taken out and we have invested in some other businesses. It means that 6,000 is not invested in the firm, it is invested in some other business, someone else's company, right? It's not, firm is not using that money. So that's why non-trade investment is not part of capital employed. Okay, I hope the meaning of capital employed is clear. and these formulas are very much clear how to use these formulas to find out the amount of capital employed. Okay guys, see you in the next video. Take care, all the best.